And so I think the next 30 to 90 days, I expect a decent amount of volatility. I expect a decent amount of chop. I do think 100K is a big psychological number. It does not surprise me that Bitcoin's flirted with it both up and down. Let me give you guys a very useful quote in financial markets. Markets either scare you out or wear you out. Only the strong survive. That is my experience in Bitcoin. Bitcoin will either scare you out with massive gut-wrenching dips or crazy Washington, D.C. overregulation or Senator Warren debanking you. So Bitcoin could scare you out, and if it doesn't, it's going to try and wear you out. It's going to go, we're breaking 100, we're crashing. We're breaking 100K, we're crashing. We're breaking 100K, we're crashing. Only the strong survive. So I think where Bitcoin is today is a wear you out market.
Mallers emphasizes the significance of Bitcoin crossing the $100,000 threshold. He describes it as a big psychological number, a level that markets inherently gravitate toward due to human emotion and psychology. This milestone, he argues, symbolizes more than just a numerical value. It represents Bitcoin's growing acceptance and legitimacy within the global financial ecosystem. Markets, being driven by human emotions, love round numbers, Mallers notes. He explains how these levels act as magnets, attracting attention and fostering both excitement and anxiety among investors. However, Bitcoin's journey through $100,000 won't be smooth. Mallers predicts a period of wearing out the market, where price fluctuations around this level will test investors' resolve. Drawing from his experience, he shares a vital lesson. Markets either scare you out or wear you out. Only the strong survive.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
$100,000 for Bitcoin is a big psychological number. I did not expect Bitcoin to blitz through this price and only hang out for a minute. I think Bitcoin's here for a long time at this 100K level. It kind of already has been, and I think it will continue to be. Listen, from a macro standpoint, I think the future of financial markets is relatively unknown, or at least I don't have a lot of confidence in the next 30 to 90 days. I think it's really certain over the next 12 months. Over the next 12 months, there's no way around it. The dollar has to get weaker. The dollar has to get weaker. We know that based on mathematics. We know that based on financial markets. We know that based on what Trump has been advocating for, what Bessent wants. I have as much conviction in a weaker dollar later on this year than I have in anything else. I'm very confident we have weaker dollar, especially once Trump gets in office and his policies start to get put in place. There's no doubt about that. The US dollar financial system and the global financial system will fall apart if the dollar strengthens. Weaker dollar, strong Bitcoin. Now, over the next 30 to 90 days, I have confidence in nothing. Why? Because who knows when Trump gets inaugurated, policies get put in place, people are going to disagree. Even today, the financial markets were trying to read Trump's headlines on tariffs. He came out and said, my tariffs are going to be all over the place. Wait, no, they're not. Yes, they are. No, they're not. Yes, they are. And markets are bouncing around. And I think we have to see, right? A campaign is not a presidency. Promises is not policy, right? And so I think the next 30 to 90 days, I expect a decent amount of volatility. I expect a decent amount of chop. I do think 100K is a big psychological number. It does not surprise me that Bitcoin's flirted with it both up and down. Let me give you guys a very useful quote in financial markets. Markets either scare you out or wear you out. Only the strong survive. That is my experience in Bitcoin. Bitcoin will either scare you out with massive gut-wrenching dips or crazy Washington, D.C. overregulation or Senator Warren debanking you. So Bitcoin could scare you out, and if it doesn't, it's going to try and wear you out. It's going to go, we're breaking 100, we're crashing. We're breaking 100K, we're crashing. We're breaking 100K, we're crashing. Only the strong survive. So I think where Bitcoin is today is a wear you out market. I think this election for the US was very emotional. I think markets are a little exhausted and fatigued. I think Bitcoin might try and wear you out by up and down and up and down and SBR. Oh no, Trump lied. Oh, Trump said this about tariffs. Oh no, he took it back. And I wouldn't be surprised if this market didn't start to get serious legs in Q2. That's my dollar bill impression. That's the best I got at being my father. Is 100K seems to be a net magnet. Markets love round numbers. Why? Because markets are made up of humans. Humans are comprised of emotions, okay? Markets love round numbers. Markets are emotional. 100K is a big round number. It's a big psychological event. It's adding a new digit. It's going to flirt with it. It's going to be attracted to it. It's going to be a magnet towards it. And I think between a scare you out and a wear you out, I think Bitcoin is trying to wear people out. Over Christmas, it was just 90K. Now it's back at 100. What's going on? Wear you out, okay? There's a certain amount of money in housing, and there's a certain amount of money in equities, and there's a certain amount of money in the bond market. And we talk about that capital rotating into Bitcoin, okay? You've probably heard me talk about this prior, where you say, there's $900 trillion worth of stuff in the world. There's no doubt you've seen me rant about this on someone's clipped it on Twitter or something, right? Where I say there's $900 trillion worth of stuff in the world, meaning $900 trillion worth of real estate that people own, and equities, and bonds, and art, and collectibles, and precious metals, right? And the sum total of stuff that people own in the world is about $900 trillion. And what we've talked about a lot is the rotation of that capital. Is that when people realize that buying 20 houses to store your money is a lot worse than just buying one house that you actually live in and a bunch of Bitcoin, right? Because Bitcoin's going to go up more. It's better at preserving and storing that wealth, right? And that's called a rotation, where we see capital rotating out of certain asset classes like real estate or like equities and like bonds.
A recurring theme in Maller's discussion is his admiration for Bitcoin's foundational design. He praises Satoshi Nakamoto's decision to distribute Bitcoin through proof-of-work mining, which he considers the fairest method of allocation. This mechanism ensures that anyone willing to expend energy and effort can earn Bitcoin, democratizing its distribution. Maller's contrasts this with traditional financial systems where wealth distribution often favors the privileged. By tying Bitcoin's creation to energy and effort, Satoshi's design ensures that its supply is earned rather than arbitrarily allocated. Maller's dismisses concerns about Bitcoin's eventual fixed supply, emphasizing that once all 21 million coins are mined, they will continue to circulate as a medium of exchange in a vibrant global economy.
Okay. What's interesting about what Saylor's doing is he's tapping into capital that isn't necessarily rotating. It's being printed. Okay. When you're dealing with fixed income markets and when you're dealing with bond markets, these markets, they're not necessarily selling something they own to buy Bitcoin. They're going to their banks, to their financiers, and they're getting a loan to buy these instruments that Saylor has. And that's what's really, really interesting about what he's doing, is that you're not asking the market to sell assets they have and rotate, is the word that we've used, into Bitcoin. That's happening. That's still happening. I'm rotating capital into Bitcoin. When I get money from my business, it goes straight into Bitcoin. That's going to continue to happen. But what Saylor's doing is he's unlocking an entire new market, an entire new liquidity pool, an entire new capital base. And what happens when people finance these Bitcoin-backed bonds or these fixed income instruments that Saylor has, they are able to effectively print money from thin air to buy these things from their massive banks and partners and those brokering the deal. So anyway, if you guys have any questions on that, let me know. But what Saylor's doing is very good for Bitcoin. He's tapping into a market that needs access to Bitcoin that doesn't have it. He's delivering a variety of different fixed income products, and I think it's tremendous. I think the momentum that we see in businesses buying Bitcoin and hopping on the Bitcoin standard will only grow. There's a difference between the US Treasury buying Bitcoin and the Federal Reserve buying Bitcoin. As soon as central banks start buying Bitcoin, which is technically like an independent bank, I would say that's next. And then after that is really, I think adoption lives in things like payments. Like if we're at a point, let's imagine the year's 2030 and governments all have a strategic reserve, central banks have a reserve of it, and Bitcoin's a 10, 20, 30, 40, 50 trillion dollar asset. I think it's going to be very reasonable that people start making payments and receiving payments in Bitcoin. So I think a lot of the infrastructure of Lightning and the hard work that's gone on over the years will be realized. And I think it's maybe completing the cyclical loop, like farm to table for Bitcoin, I think will become more important. To be clear, I do not expect that over the next 12, 24 months. But I don't know, maybe the next 3, 4, 5 years, Bitcoin farm to table, interesting for me. And, the first problem you have to solve in a new money is distribution. How do you get people to own it and store their time and energy with it? But after governments own it and central banks own it and retail has access and Wall Street has access, then I think it's a lot of the tooling to make it useful. Like a guy like me, I'm probably early in living a life fully on Bitcoin. You guys know, I don't own any dollars. I don't own any fiat. I only own Bitcoin. A guy like me, make payments in Bitcoin. You guys can pay me for stuff in Bitcoin. I expect a lot more of the world to be like that in 5 years. I feel like people wouldn't mind if majority of their financial life is centered around Bitcoin. One of the genius innovations of Satoshi is how Satoshi distributed Bitcoin. Satoshi did not take Bitcoin public with Goldman Sachs. Satoshi did not give away Bitcoin to his close family and friends. Satoshi used mining, proof of work. People think of mining and proof of work and accomplishing a lot of things. Something that gets very, very underappreciated is mining and proof of work is a way to distribute the coins fairly. If you create a new money, who gets it? It's a really tough question. Is it the really, really tall guys, the really, really rich guys, the really, really smart guys, the people from the US, the people from the UK? Who gets the money? And the answer is whoever does the proof of work. And that's the only fair way I've heard of to distribute the money, right? Everyone has access to energy. It's how you live. If you stop eating food, you don't get any calories, you have no energy, right? You die. So we all have access to energy, different varying resources of energy. Whoever does the proof of work gets the Bitcoin, gets the initial distribution. When people say like, oh, Bitcoins are going to run out, what happens when the Bitcoins are gone? What do you mean? They're not gone. They're fully distributed. Then we all work and live our lives and exchange them. That's how it works. But proof of work in many ways was about distribution.
Mallers acknowledges the challenges facing Bitcoin, including regulatory scrutiny, market volatility, and public skepticism. He cautions investors to remain steadfast amid attempts to scare you out with dramatic dips or overregulation. Conversely, the wear you out phase, characterized by repetitive price movements, tests investors' patience and resilience. Despite these hurdles, Mallers is optimistic about Bitcoin's trajectory. He points to growing institutional interest, innovative financial products, and the unwavering dedication of the Bitcoin community as evidence of its unstoppable momentum. As businesses and individuals increasingly adopt the Bitcoin standard, Mallers believes the network effect will drive exponential growth in its value and utility.